Hello, everyone. This is your daily dose of economy. Just in, China dumped an all-time high $42.6 billion worth of U.S. securities in May. Equity inflows surged $39 billion last week, the second largest in the past year. Implied volatility across assets is low and has declined year to date. Fed cutting cycles can be very supportive for gold if followed by weaker growth. Fed cutting cycles can be very supportive for gold if followed by weaker growth. Equity-bond correlation has started to decrease. CrowdStrike off the lows, but also off the highs. Gold glitchy, back under $2,400. The University of Michigan survey of consumer sentiment shows that a record high 30% of the population has stocks worth more than $500,000. And 37% own a home worth more than $500,000. VIX seasonality suggests the recent surge in VIX is just the beginning of a larger move. DXY is back above 104. China's main export markets are in the West. It is here that China's future lies, especially since it has weak domestic demand, yet President Xi thinks it's a good idea to align China with Russia, red. China's exports to Russia of transport equipment pulled back in early 2024, and some thought this might be due to fear of secondary sanctions. No, the pullback was just Chinese New Year effects. The U.S. comes nowhere near the surge in EU exports to Russia via third countries. Here's exports to the Central Asian transshipment hub Kyrgyzstan. The U.S., green, isn't even on the map compared to Europe. The tech sector now represents 44% of the S&P 500 index. Risk happens fast at these absurd valuations. We just saw the largest sell-off in the SOX index since the pandemic crash. Copper's $5 level reminds of the gold's critical $2,000 mark. Once gold breached that resistance, it kept moving with authority. We are currently experiencing a multitude of technical breakouts in the precious metals industry. Junior miners to gold ratio also breaking out from a 14-year downward trend. The GDX ETF, or the most liquid gold mining stocks ETF, also poked its head out of a 14-year resistance. China's credit growth hasn't been this slow since 1999. Looking at misery rates, unemployment plus inflation rates around the world, Argentina is clear outlier at 280%, US ranks quite well and behind Australia, Canada, and Brazil. In level terms, number of home listings with price drops has risen to highest on record. Year-to-year change in rolling 4-week average up to plus 6.7%. Adjusted for ISM methodology, manufacturing index soared to a new cycle high in July. Prices paid components in Philadelphia Fed, orange, and Empire, blue, manufacturing indexes not signaling a worrisome spike in inflation. Much stronger recovery in July for Philadelphia Fed new orders, orange, compared to Empire, blue. Spread between bulls and bears keeps climbing, pushing against upper end of range over past few years. Totally different stories being told by Philadelphia Fed, orange, and Empire, blue, manufacturing indexes in July when it comes to employment. Year-on-year change in leading economic index stayed in negative territory in June, but trend has continued to improve. Last time new orders component, blue, in Philadelphia Fed index was at its current level. Prices paid component, orange, was at plus 72.3. This time, latter is at just plus 19.8. Conference Board's leading economic index, LEI, fell by 0.2% month per month in June, a continued improvement relative to prior months, but still in negative territory. Index has not risen since February. Nasdaq 100 currently in its worst three-day slide since February 2023. Rolling 100-day moving average of the U.S. Economic Policy Uncertainty Index is at its lowest since June 2019. S&P 500 real estate sector hovering near a 52-week high and has 87% of its members trading above their 200-day moving average. Current drawdown for S&P 500 communication services sector about the same as what we saw in April. Chicago Fed National Financial Conditions Index is at its loosest since November 2021. That 200-day SMA is doing some heavy lifting. Correlation between market cap weighted S&P 500 and S&P 500 equal weight version over the last 30 sessions has completely broken down and registers as close to zero as we have seen in 20 years. Charles Schwab completely falling apart here. Earlier this week, 72% of small cap stocks were trading above their 200-day moving average, the most in 3 years. Dr. Copper is falling apart. Is trouble brewing for the economy? If you can see a giant red daily candle on a 20-year chart, that's not very good. Long-short hedge funds suffered their worst day yesterday since the fourth quarter of 2022, source, Goldman Sachs. Semiconductor stocks SMH suffered their biggest decline since March 18, 2020. Netflix trading lower by more than 2% after guiding revenues below consensus. Netflix added more than 8 million new subscribers this quarter, with growth coming from all regions. The average fee per card crossed $100 at American Express this quarter. Stock is down 3.8% this morning. Before the huge reversal in the past week, the ratio of small caps to large caps hit its highest level since October 1999. Signal or noise? That's it for today. I hope it was useful. I'll see you guys again very, very soon. Later.